why we invest in stocks. So there are multiple reasons why you invest in stock as an investor. You represents ownership in a firm, right? So once you buy a stock, so till now whatever we have learned about equity market investments, right? Talking about primary market, talking about secondary markets, how the stock exchange functions, and and how the cycle functions and how you can place an order. We are all learning about equity, right? But till now, whatever we have learned is about equity market as an asset class. So whenever you want to invest into a market, you are talking about here equity markets. So when you talk about equity markets, why one has to invest in those equity markets? They should invest to beat inflation, to accumulate the wealth, to meet their aspirational goals, right? So where you will invest? You can invest into bonds, you can invest into equities, you can invest into real estate, you can invest in commodities, you can invest in private equity investors, hedge funds, you can invest in multiple instruments. But now we are talking here about equity markets. Till now, what we're talking about primary market and secondary market and transaction cycles. We're talking about the equity markets here. So when you invest into the stocks, you become a part owner of that firm, right? And you earn a return in two ways. One, you earn an amount of money by way of appreciation of the stock. So let's assume you have taken an Infosys stock at rupees 1300, or today's price I think it's 1400 or something on. So if you're buying a stock at 1300 rupees, or one stock at 1300 rupees, and the price over a 6 months period have gone to 2000 rupees per stock, that means 600 is what you have earned over a period of time. That 600 is nothing but is your return, and that return is nothing but a way in which your capital gets appreciated, and that is the return that you are expecting from equity market for investing in equity. And second, also it's nothing but a dividend that you will derive from investments. Okay, so what type of form of returns that you will derive from dividend? So what is dividend basically? Dividend is nothing but a part of the profit that a corporates will provide you because you have invested in their stock. You have reposed the faith in that, okay, on the company, and you repose the faith on the company, and the company is doing very well, and they have a huge profit. Then they will pay to the shareholders in the form of dividends. Dividend is nothing but on the face value of a stock. So let's assume your face value of a stock is rupees 10, and they're saying that I am paying 100% dividend. That means they are paying you rupees 10 per share. Okay, so that means they are paying you a dividend of rupees 10 per share. So if you are holding 100 shares, you will get 10. So in 100 into 10, you are getting 1000 rupees of dividend. Now this dividend can be of two forms. Dividend can be an annual form, or it can be an interim form. It can be declared. So we'll have a detailed discussion on the corporate actions where we learn about how the dividend is being paid to our stockholders. Okay, so they get two ways of return. One is the way of by way of rising of a price, and second is way of a dividend which are paid to a shareholder. Now you have to pay taxes on it. The government takes taxes on your capital appreciation. So if you have sold it within a 1 year period, then you have to pay a tax, or as called as a short-term capital gain, that is 15%. So whatever return that you have earned, you have to pay on that 15% tax to the government. And in case of long-term capital gain, if you have long-term capital gain is nothing but if you are holding more than 1 year, that means you have sell, or if you buy a stock today, and if you have sold it to the next year or more than next after 2 year or 3 year, then it is called to be a long-term capital gain. And that long-term capital gain is nothing but a taxes if you have earned it more than 1 lakh rupees, then you, over a period of time, over a period of year, then in that case you have to pay 10% of tax on it. So if you are holding a stock for more than 1 year, you have to pay a lower tax or no tax. So if you are not earning more than 1 lakh, then in that case you are not required to pay any taxes to the government in case of long-term cap, if you are holding for a long-term period. But if you are holding for a short-term period, you have to pay a 15% tax to the government on the return that you are earning. Also on dividend that the company gives you, on that also you have to pay a taxes to the government on whatever the slab you are falling into. So on both returns you have to pay taxes in each and every return, whether it is you are investing in the real estate, you are investing into gold, or investing into private investor. On every return, whatever you are, if you are earning it, you have to pay taxes on it.